What's going on, everyone? What's going on, everyone? Good morning, everybody. This is Jordan with Conquer Trading and Investing. It's Friday. It's Friday. Looking forward to this session for you. We got a lot to be happy about today. We had some amazing non-farm payroll numbers. What market has every reason to be celebrating today. This sheds a whole new light across all the markets, most assuredly the US dollar. We have no sound. Have we got sound up in here? Everyone could get a sound check over here. Dun, 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 bum, bum. Yeah, there we go. All right, just wanted to make sure that we had sound before we get going over here. Good morning, everybody. We got the whole world here with us. Good morning, Esan, Jesse. Awesome, AJ. Thank you. There we go. Good. Unexpectedly, that's not what the forecast was, right? We had just a stellar jobs number. I know you guys are all aware of it. We added 2.5 million jobs to the US, while we were expecting actually a loss of 7.7 million. This is a wonderful number over here. Now, let's not get ahead of ourselves. Obviously, there's lots of moving pieces, and a lot could go wrong, especially after we've seen, what has happened in the U.S. with the riots and whatnot. But we're just going to focus in on today. Today is Friday, June the 5th. We got the market pricing in a lot of stuff. We got yields rising in the U.S. This is probably going to add a little bit of fuel to that. Buenos dias, Anapao. Yep, you don't have to FOMO over here. You don't have to FOMO. That's fine. That's fine. There's a lot of money made earlier in the year, right? There's a lot. So now it's just wait and wait. There's still a lot of the year left. There's still a lot of the year left. Airlines are skyrocket. Right. We're not worried about what's priced incorrectly here, what's not over here. We're going to focus on what is happening right now. We see obviously the S&P trading at session highs in pretty clear skies over here. Everything is absolutely trading accordingly. DXY making a move right into this resistance over here. We see treasury yields are bid. The 10-year is breaking out. This should attract more inflow into dollars over here. And the DXY, I think, needs to be repriced. Trump speaking at 10 a.m., he probably wants to celebrate these really good numbers. Now, it is a question, and I've been watching the virus numbers closely ever since, yesterday. And, we're seeing Florida reopened. We saw 2 weeks later a resurgence in cases there. They had this week actually record high in new cases. That's worrisome, right? We're also seeing, we saw obviously a lack of social distancing, to put it lightly, throughout all the riots. We're going to see how that affects, in the next couple of weeks, what that affects. Right now, though, dollar is strong. Dollar is definitely the story. We're seeing oil bid. We're seeing huge risk on moves, appropriately so. Look, you have to look where the growth is, right? There's a lot of good trades. US dollar, Japanese yen is one of them. We're going to look at that in a little bit. It's broken out here above the trend line, this 5-year trend line. The yields now favoring the dollar here. This trade could finally be coming to for taking off over here. Dr. Kenneth, great to see you over here. And then what else is going on? Euro, Australian dollar also being rejected off this strong resistance, looking beautiful over here. Euro under a little bit of pressure over here on the back of that stronger dollar. Where's the growth taking place? Is it going to be taking place, or does it look like right now it's going to be taking place in the US, or in Europe? Lots changing. Bitcoin's looking good, actually. Look at this. Bitcoin broke above this upper trend line over here, came back, retesting it. Could be a good weekend for Bitcoin over here. Again, Bitcoin's doing its own thing. It's not really keying off the equity markets, but that's to be expected right now. Gold and silver are definitely trading off this morning. Gold really getting banged up. Makes sense, right? We are completely risk off right now. Appropriately so. We're risk off, but we're bid dollar. We're bid dollar because of the right reasons. We're bid dollar because the US is looking resilient. The US right now, things could change next week. No question about that. Again, the focus in our mind is what's going to be happening over the next couple of weeks. If we don't see the civil unrest coming to any type of conclusion, that seems to be spreading, that seems to be growing. And also we're really concerned about the greatest threat to the economy. And that would be actually a resurgence in the virus cases. Now, good morning, Cameron. Good morning, everyone. Glad to see you all. Let me get a quick check of everyone in here. So glad to be with you this Friday. I love Fridays over here. Does the dollar continue to weaken versus the euro, or do you think the dollar will start to make gains? When we're talking about the euro, the US dollar, now here's the DXY, right? You can see we're coming up into this little bit of resistance right over here. First little poke at it, we backed off, right? Again, we move over to yields. Yeah, yields rising in the US. What does the Fed have to do now? Now that the economy, our markets are trading at near highs, we see jobs being added. Do they have to start raising rates? I don't think they can, but what happens if they start talking about raising rates? We're going to really see the dollar get repriced. But as far as the euro US dollar right here, you looked at the DXY and that was trading right up against some really important resistance. And here's that little support right there. If this breaks down below this support over here, the low of the London session right there, you got the support at 1.1282. Could you expect further downside? I think so, absolutely. I think we could come down pretty far. I think we should come down and test at least the whole number at 1.11. That seems reasonable to me. So we have two support levels, though. First, we need to work through. We'll see what happens. Now, the initial numbers here are looking fantastic. We saw that wages, earnings per hour are down a little bit, but that's because we're now seeing jobs that are added or more, I don't want to say lower tier, you could say service, perhaps waiters, things like that. We got all. So I saw that actually the EU basically said no progress has been made, that perhaps in the fall that they might be able to go ahead and make some progress in negotiations with the UK. I think what you're seeing here is pricing against the Japanese yen. There's really not, in this moment right now, a reason to be pricing in any risk off. Today, absolutely affirm that. Those that were, I'm always looking for the easier place of the trade. I'm always looking for the easier place. That's the thick part in the middle, right? So what are we looking at over here now? Now risk off seems pretty safe, right? Buybacks, pullbacks into support, buy. So Japanese yen, that's being definitely repriced as we come off of this risk off. Now, is that possible that it's going to rear its head at some time in the future? Of course it will. It's the markets. There's no question about it. But that's not happening right now. Pound Japanese yen coming into some strong support. Is this the time to even think about fading it off strong support? No, it's not. we're looking, but the play, I think, is the US dollar, Japanese yen. I'm in the euro, Australian dollar, and the US dollar, Japanese yen. I think these are the two plays. If we break above this 109.71, the first opportunity we get and test the support, I'll be looking to also add to this position. This could be a position that is really taking off. You know, I all have my eye on 112.18, and a break above there will really set this off. I am looking for a position trade here on US dollar, Japanese yen, not a swing trade. Wow, market's really following through over here. Now, it is true at this time of day, normally what you see is a retrace on the equity markets. That is not happening today. We just came over here, tested that support, flipped it again, and now are really just running high and not even seeing a pullback before the US markets open. Really interesting. Going back to the dollar. Dollar's off, okay? Dollar's off a little bit during this time of retrace in the morning. Let's see what happens over the next 50 minutes on the dollar, whether or not it could break above this. Right now, the story is the U.S. equity markets, and it's also crude. OPEC is meeting a video conference. They're doing a meeting, and this bodes well for oil. Here we're cutting close to closing this gap. Is a good chance. There's a good chance that we do it. We wake up Monday and could be closed. That will then become interesting. We'll see and wait what the details are, and then refer to some of the experts. We'll be watching definitely what's happening on the charts, but want to take a look. Those that know say we are going parabolic, but now at least the market has a reason to be celebrating, right? It makes a little bit more sense. There's things. So whether it's divorced from reality or not, which is true, it makes sense today where it hasn't made sense. It's got reason to be euphoric. It's got reason to celebrate, right? Now, we do have, snap back to reality, right? We have all that will definitely come into play. That's not right now. We need to focus on what's in front of us. Is that going to come into play? Absolutely. Is solvency still an enormous issue? Absolutely. Could this become one of, of course. The market's not focused there today because it's not happening today. All right, let's focus in where the market's focusing. We'll spend our time. We'll spend our time when we get the chance doing our macro, and we'll take a look at what's important for the bigger picture over here. This data is delayed, so I don't want to look over here at the Nasdaq. I could look at this over here and excuse me, what is this? The Dow 30 is completely up 2.63%, S&P up 1.85. We'll see as the markets open, they're going to be going off today. Precious metals under pressure. It all lines up. It all makes sense today. When things make sense, look at this, it's collapsing now. Loving this. All right. Let's start taking a look over here. First, I want to take a look at a bit of your comments and see what's going on with you all, to see where you're at, and then we'll start taking a look at some charts. Again, US dollar, Japanese yen is looking beautiful. We're coming up now to the blue line. Above this is uber bullish. Breakout above this 5-year trend line. We've happened twice. Both times was rejected. Let's see if third time's the charm. Again, I'm looking here at a position trade. I'm not looking to take profits on this one anytime soon. We'll see where it develops. All right. Yeah, that's a really, well, the question is would the government be able to lock down again? People aren't really paying attention right now to what authorities are saying. Mark, no way. No way. Are you kidding? What do you mean? The stop that was all the way at the high over here at 31.33. That was like 40 points ago. You know when you're wrong. Gold is definitely off and makes sense. Gold doesn't become attractive now. Gold doesn't become attractive now until like 1640 or perhaps 1578. Those are the numbers to watch. I'm not even watching the 1670 support. Now, that's not to say it doesn't hold, but I've talked about those levels for a while. The only way that it starts becoming attractive again is definitely at lower levels. I'm interested to see if the conversation changes at all. Chad, a position trade is a trade that you're looking to hold on to for an extended period of time. That could go from several weeks to several months, right? As we're breaking above this trend line here on the, I've been laying this out for weeks, for several weeks, every weekend on the Forex forecast and analysis, weekend Forex forecast and analysis. This 5-year trend line breaks. You all know I love my trend line breaks. This is now breaking out here with authority. Again, the break over there, well, I got into it on a swing trade, right? But I'm not looking to take profits on a swing trade. Now, if we're able to break above here, I'm looking to add again, and then I'm going to be waiting and looking what happens around if we get there, 112.18, right? Let's see what happens up there. That's where if we break out above there, this I think becomes very interesting. We could see much higher levels, right? Closer to 114 and then eventually even 118. So if I get into this trade, things are lining up now. Things are lining up now. Is it possible? It's probable. It's actually probable at some point in the future, we go to a risk off atmosphere again. And that's when I'll be looking to wind down that trade. But normally an average trade for me is just a couple to a few days, between 1 and 5 days. So I'm looking at this point, as in the beginning of the crisis, when I was advising people, think of things differently, look to get into position trades here against the Australian dollar, New Zealand dollar, with the Japanese yen and the Swiss franc. It's a similar situation right now. Generally in these cases, you're still apt to take profits sooner than you should. I'm looking to ride it until we get risk off for a reason back into it. What about the previous 2 breaks? They failed. You got to follow what's on the chart. They failed. Could this one also fail? Yeah, there's no question about it. It's not a given by any chance. No, not at all. Let me just to give you a little bit of perspective, first of all, and like, let's be clear, different strategies on foreign exchange than on the S&P 500. But when I was over here, bottom picking, right? Bottom picking between 2260 and 2310, right? But I got stopped out like 7, 8, 9 times, short stops over here, before getting like a 250 to 350 pip move before taking profits. No, absolutely not, right? No way. Stops. And anyway, no way. And foreign exchange is absolutely different, right? You all know I only trade on the 8-hour. I'm only buying off of strong support and selling off strong resistance in downtrends. And I'm only looking to take the piece of that. S&P, I'm trading intraday, completely different. But no way, things have been working out beautiful. You guys see, right? Some trades that I call out, and anyway. Again, my strategy got me into this beautiful trade today, right? Over here, boom. US dollar, Japanese yen also. Yeah, Gary, we're into some strong resistance here, right? And if you look at it over here, it's a strong area of supply. It is very strong resistance. At this point, though, there's no reason to step in front of this. There is no reason whatsoever to step in front of this. Yeah. Well, first of all, it's a good question, so I'll definitely address it, but please don't spam the channel. Everyone wants to be heard. So really curious to know my opinion. Is this a recovery or just a bear market rally? Well, it's a really good question, and no one could really answer that, right? The equity markets have definitely recovered. There's no question about that. Now, does that mean that they're going to go on to new all-time highs outside of the NASDAQ, or the Dow and the S&P going to follow suit? Well, that's not really something that could be answered, right? Is it possible? Yeah, it's possible. Has the economy recovered? No, it has not. The economy has not yet recovered. We are seeing today some positive, good signs. Will the economy recover? Listen, You're talking about it in California alone. You're talking about they're trying to pass a bill where anyone who has any type of commercial lease, if they're not able to renegotiate favorable terms, is able to get out of it. So what happens to all the people who own that property, the landlords, right? Who, when you have all these retail stores, these restaurants, and they're not paying their property, how are they able to go ahead and pay off their mortgages? There's going to be massive defaults. There's going to be massive risk in the credit markets that could have cascading domino effects. Everything is extraordinarily fragile. You could see how worried Powell is, because this thing in a second could turn really bad. And if it turns bad again, what's going to be the hope to save it? The Fed can't lower rates again, right? What are they going to do? Well, obviously helicopter money is the last thing they could do. And maybe they could prolong it a little longer, but no, we're not, everything is not awesome. Everything is not awesome by any means. All right. Careful out there. Yeah. Australian dollar, US dollar. Let's look at it. If anyone has seen the worrisome data out of Sweden, a couple of weeks ago, people are wondering, well, did they do the right thing by not locking down the economy? And now it's very clear, data is data, that they did absolutely the worst thing possible. And what's going to happen, right? As all the people within the U.S. over these last 2 weeks now have been in these crowds, right? We could see the second wave. I thought was going to be coming. I thought it was going to be coming in the fall. It could be much quicker now, right? This could be a disastrous setup. It's too soon for us to tell. Lego move. So here we go over here. Oh, and we talked about it yesterday. We saw, because of Ramadan, a lot of Muslim countries, a lot of people, they ended at lockdown early. They ended their quarantines to go on pilgrimage, and we saw a resurgence in cases. Yeah, Alexander, what's going on over there? Do people think that they did the right thing? Yeah, the situation is getting worse. Data is data. And now we're seeing that in the US. I saw a cafe in Paris. The streets of Paris are packed and people are close together. I'm all about freedom and liberty, no question about it, but I'm also about using your head and being smart. So here we go. Australian dollar, US dollar, we got some nice resistance right over here, but we're in a strong, super strong uptrend over here. This is also broken out here after a failed break of this 1.5 year trend line. And since it's broke, I love trend line breaks like this. You all know that. And it has came up and is testing this area of resistance. Right now, this is buy into pullbacks. What about a stronger dollar? If the dollar does become bid, if they talk about starting to, anyway, the treasury market yields are up. That's favorable for the dollar. Could this thing cool off for a little bit? Well, we're looking right now to buy off support. We're looking right now to buy off strong support. Right now, we're in no man's land. I'm not looking to fade this. If you're looking to trade to trade for the dollar right now, well, the euro looks probably like a better opportunity than the Australian dollar. The Australian dollar has a lot going for it in this risk-on environment. As long as we're above this trend line over here, right? It's pretty favorable to the buy side. There's no way. Only look for buy. I'm only looking for buy side trades right now. The Australian dollar, US dollar is not one on my radar. But I just talked actually about playing perhaps the dollar over the euro, but not the dollar over the Australian dollar. Well, that's the trade on. That's the cross I'm on. Euro Australian dollar. Not me. No vaccines over here. So are lockdowns ever coming back? Listen, JW, I don't know. That's a really good question. I don't think that anyone will have the authority to go ahead and but a lot of people are also smart. And if they see infections are rising, what are they going to do? They're going to self-quarantine, right? I know I'll be my family. I'm going to protect my family, right? I'm going to protect my family. So, are there going to be mandatory lockdowns? Good luck trying to enforce that. Are people going to use their brains? I hope so. I mean, I don't know if the unemployment numbers are manipulated or not. You saw we saw massive numbers of layoffs, and it was always the premise that if the economy started to open up, that most of those jobs will come back quickly. We're just seeing this is just the initial bump over here, right? This is just the initial bump. And so, did a lot of people go back to work over the last couple of weeks? I would think so. I mean, outside of the urban areas that are rioting, like, if you saw New York City, Manhattan, it's all boarded up. It's all boarded up, right? But then the rest of the world, that's not the big cities, is not the only place in America, right? You have thriving small towns in America. Are those people going back to work? I think so. You're biased from Zero Hedge. Excuse my constructive criticism. Well, I don't know how constructive that is. Am I biased towards Zero Hedge? Yeah, I've been following Zero Hedge now for, I'd say, about, 15 years. And over those 15 years, Zero Hedge and the information that I'm able to go ahead as a big boy, discern whether or not I agree with it or use, has helped me enormously in my career. So am I biased I'm not biased towards any information. I'm open towards all information. I was on CNN this morning. Why was on CNN? Because I want to see what type of programming they're throwing out there. I read all information and then I discern what I believe to be the truth, right? So thanks, buddy. Yeah. So June, I mean, the survival of the fittest. We have some people who will be able to deploy critical thinking. Now, I know that's not really taught in the schools anymore. So then we'll have a massive amounts of young people, the ones that are out in the streets right now rioting, who will not be able to go ahead and be able to think for themselves, and they're going to follow the herd. They're going to pay the price, right? Survival of the fittest. All right, let's take a look at some charts over here as the markets are now opening. We have about 3 minutes to the U.S. equity markets open. 350,000 people die each year from pneumonia, right? Yeah, so this is not the flu and this is not pneumonia. So whether you, anyway, yeah, AJ, I do think a treatment is something that is the first thing that could happen. And that is, I obviously don't believe in a vaccine. I don't believe it would be possible to develop a vaccine for it, right? This is not really the conversation that we need to have, but it's Friday, whatever. Right? We don't have a vaccine for HIV. We don't have a vaccine for any other forms of coronavirus. We don't have a vaccine for the common cold. What makes you think that in 6 to 18 months they'll develop a vaccine magically? Bill Gates, for the coronavirus? That's not going to happen. But is a treatment in the works? Yeah, humankind is going to beat this. There's no question about that. Maybe it'll just die off. That's a possibility too. Maybe herd immunity will definitely come into effect, but Sweden is an example. That's not happening right now. Sweden is proof of this. Survival of the wisest. I like that. I mean, I thought fittest meant wisest in that context, but I like your choice of words. So that's a great question. Do we expect the majority of retail investors will react more dramatically than the institutions as soon as the tide turns? Yes and no. I mean, so I saw a Twitter video this morning. I could pull it up for you right now. I hope you could hear it. Let's do that. I don't think I'm logged into Twitter. I can't do that. I'm not logged on Twitter on this browser. And it was this kid in front of a Starbucks, and he's like, look at Delta Airlines up 7%. Look at Carnival Cruise up 12%. I told you all to buy this stuff. Obviously they're buying Hertz in bankruptcy. They have no idea what's going on. And yeah, there's nothing, you could be right for a period of time, but in the long run, they're not going to be right. And if we were to start seeing serious solvency issues in the market, and we did see another crash happening, and if we have another crash, it's going to be worse than the first. If we have another crash, it's going to be worse than this one. There's no question about that. They will be Robinhood users will be buying that all the way down. They'll be buying all the way down. All right, let's look over here at the DXY, which is unchanged on the day. It initially spiked off of the numbers and now has come back down. It's still positive on the day. Let's take a look at what's going on with the 10-year. That's slightly off, but look at this. Definitely rolling over here. Looks bid. Looks like as the dollar index, right? It looks like we're going to see a further bid in yield. And if that happens, we should see further a further bid in the DXY. Now, nothing's a given. That's why we follow the charts over here. So far, we're rejected by this resistance, and we're rejected by it, and we're rolling over. Still a lot of session here ahead of us. It's Friday. The crash is not going to happen. I don't know about that, but the crash is, I'm still definitely in favor of actually we're going to see a crash. So, you know, tell me I'm wrong. I'm not normally wrong. Yeah, I don't think so. I think we're going to see a crash. That's where all of what I refer to as the smart money still believes. So yeah, man, we'll see what happens. I'm just glad I have the opportunity to share this all with you. Yeah, precious metals are dropping right now because right now we're seeing yields rising. We're seeing no reason for risk off. We have huge risk on. So precious metals have every reason to be dropping. Don't forget, we're still in a deflationary type environment, right? Is that eventually going to turn into inflation? Should you be looking? Bitcoin's looking weak. Bitcoin's looking really positive today, holding above this trend line over here, right? That's looking pretty good. This is, if you see it resume off, a buying opportunity now that we've broken back above this trend line. If that holds now as support and comes back above, that's a buying opportunity. Bitcoin looking good. Yeah, and you know what, Patel, maybe this euphoria lasts. Maybe we come out. Maybe we could take out the highs over here. Why not? I'm not against it. Just because I think this is going to end badly eventually doesn't mean that's going to be today. So, you know, right now we're super bullish. It's all good. Right now, yes, Pat Daddy. It turns out that QE causes deflation, right? That's what we're seeing. That's going to continue for the foreseeable future. Is it possible that this is going to one day turn to inflation? Well, we're watching out for that. All right. What else are we looking at today? You know what, Gino? I'm not one who plays gaps. Gaps could take an extraordinarily long time to close. So I'm not one that minds the gap at all. Kyle, I don't think it's the M2 money supply. We looked at this very closely. It's actual global liquidity. And what that means over here, this is really important for everyone, right? If you were looking at M2, right, which is now growing, and then you were all of a sudden to see a bunch of bankruptcies, which really rocked the credit market, right? Even though the money supply was still up, you would see a crash in the markets. Thomas, let's check it out. Let's check out Bitcoin as we're coming into the weekend over here. Possible formation of a right shoulder on the weekly chart. Ooh, I don't think that's possible. Are you looking at, is this a possible left shoulder and then a head and then a right shoulder? That doesn't, to me, look anything. If that's what you're looking at, that to me doesn't look anything like a head and shoulders formation. Is that what you're looking at? It looks like a triple top that's about to be broken. Well, right now there's no reason to even consider taking a position here on the equity markets over there. Let them come up. Interesting, the dollar's down. Interesting, the dollar has faded this morning's moves. U.S. equity markets have now opened. We've come back down from the resistance, right, and now have come into an area of support. So let's see what happens. Let's see what happens. Yeah, I don't know. I mean, long lost plus the Fed owns a lot of those bonds. So maybe they're going to come in and bail out Hertz, and maybe the millennial traders were right. Maybe Carl Icahn was wrong. Maybe all the smart money is now dumb money, right? You know what? You could be right for it's about being right in the long run. So we'll see what happens. It's obvious that printing money is supporting jobs in the short term. I think we saw, obviously during the lockdown, we saw a bunch of people who had to, all of a sudden go unemployed. And now we're beginning to see some jobs open back up, and we're seeing that reflected. I don't know if the job market ever returns to normal. I don't know if the job market ever returns to normal, right? I don't think it does actually. But right now, after seeing an abnormally large spike, you're now seeing that retrace down. That doesn't mean that we're ever going to return to normal. Gold, gold. I would stay away. Gold. Wow, gold's off 2.4%. I'm just waiting on the sidelines over here. I'll be looking. Let me get to gold. I'll be looking not at this support down over here, and maybe it holds, but it'll become attractive to me maybe at 1640 or 1578. 1578 probably even more. I'm very, very bullish long term on gold. Seasonally, this is not the time for gold, and right now, the way that the markets are lining up, gold doesn't have a reason to be shining. So I'm just hanging out, waiting for a better opportunity to buy gold. Gold is not in play right now. That's for sure. Interesting conversation. Loving the conversation taking place today. You guys are loving it. I don't know. That's an interesting question about Netflix. I think at the end of the day, it depends on people are always watching TV. It really depends on the quality of the content. If they're able to go ahead and produce any movies that are blockbuster hits and or series. 1580, Aaron, that would become very attractive for me. At 1580, I would need to be looking and I think that at 1580 I would be adding some physical holdings. Right? So deception is irrelevant. So this market is absolutely perfect for Bitcoin. Calvin, great to see you. Good day. Good evening. Great to see you. Bitcoin's looking really good over here. I think it's just actually now a matter of weeks, right? Or sooner. Anywhere between now and, several weeks, I think we break out here and the bull market starts. We are seeing a surge here. Let's look over here. Look at this huge gap up on the Dow. Wow. Wow. That's now breaking up here with nice authority. It looks good. To fade that would absolutely make no sense. No ways to think about that. Jordan, it's a really good question. I've seen, I'm not trying to follow what's going on because it's really sad. It's really sad. No, I'm not watching any levels on the S&P today. I'm not watching anything. There's no trade on the S&P today. It is Friday. going into the weekend. A lot could happen over the weekend. There's no, I think so, David C. But there's no reason here to be looking to go ahead and take a position. So I'm not watching any levels today. I'm going to reevaluate after the market closes today, take a look at it, and just wait for an opportunity. Right now, that market is euphoric. There's no reason to jump in here and take a position. Simply wait. Probably wait now for the first opportunity to buy pullbacks. FX is pumping and got two nice positions on. Let's see what happens. Japanese yen, rightfully so, is seeing a move against risk on. We're seeing risk off. Japanese yen, Swiss franc under huge pressure. New Zealand dollar continues to be the strongest. Australian dollar is strong. And again, you have the euro and also the pound, which are just moderate. Yeah, listen, tech is selling off, a little bit of profit taking, maybe moving into different sectors. Markets could be delusional, Luminary, and that's fine, but we're going to follow what's happening and not trade against what should be or shouldn't. Is this your fear stage? It's soon to tell. We could only look at what we're looking at today. Listen, no one in their right mind could be thinking about taking a position against the equity markets right now. No, Bitcoin is not going to dump. Bitcoin is set to break out here. Bitcoin is not looking to dump. Gold and Bitcoin are completely two different assets and they trade. So Bitcoin is trading on its own 4-year cycle, right? Bitcoin, again, let's look at this just chart one more time because it's completely worth it. This is the cycle Bitcoin trades off. This is 4 years. Follow down here, and this is surrounded by the halving cycle. Every 4 years, the miner supply is cut in half. This is what Bitcoin trades around. You could see over here where we are right now at this red dot, a couple of weeks after the halving. This red dot is what sets off the bull market phase. Now, technically on the chart, for that to happen, we need to still confirm that. We haven't yet confirmed that. For us to confirm that, it is us breaking above this trend line over here, this trend line right there. That confirms the bull market. And that's also right now coming in at the 10,400 support, right? So that's why as we traded up there last week, I said, well, we're really nice to see that, but we're not saying it's a bull market. We haven't broken out above that resistance. That's how we started the live stream off. That's where we are right now. But if you look at the past red dots, that is the beginning of the bull market phase. All right. And then that's where we are right now. It's nothing to do with gold. It's nothing to do with anything else. It's its own uncorrelated asset. Now, as we get back into this area over here where you see this light orange turn into yellow, that's the top of the bull market. That's where we begin thinking about, right, about 25 months until the next halving, becoming uber bears on the price of Bitcoin, not the technology itself. And we're going to be looking for an 80 to 85% drawdown until we start accumulating again once we become dark green, about 15, 14 months into the next halving. So if you are listening to people who are calling for 3,500 or 3,000 or 1,000 Bitcoin, or be careful. That's not my thesis. All right. Yeah, you know what? Any pullbacks on the Japanese yen at this point is going to be beautiful. It's just going to lead to an opportunity for buying, right? Everything looks very, very, we're in a strong uptrend, right? I don't think that this is leading to any type of blow off top or on the markets. We need to see things change. The conversation needs to be changing. It's not right now. This is, a pretty, stay with the trend. Don't look for reversals. What is it, a good target for the S&P longs over here? That's a good question. That's something worth looking at. What's the next strong resistance is all the way up at 33. That's the next area of strong resistance. What else do we have to look at over here? There's pretty strong resistance at 32.62. Let me draw that in. So really appropriate for us to all talk about today. This is probably the most important thing for us to talk about today. This is the market overbought. Yep, market's overbought. Market could remain overbought for an extended period of time. Markets can remain irrational longer than traders can remain rational. But the thing to understand is when you have yourself, if someone is holding a good position, you have to know when to push that position. And you could only get out of that position when the market then takes you out, right? So you could start looking for swing lows. Right now, if you're long over here, would you want to exit before we took out this last swing low over here at 30.88? I can't imagine why. I can't imagine why you'd want to look to exit before that last swing low. As long as the market continues making higher highs, you want to be involved in that market on the upside. In my opinion, any pullback will be an opportunity to go ahead and continue looking at the long side now that we've cleared this area over here, to clear this resistance at 31.36, right? Everything is going for the market. So that's where you got to be looking for. That's what you got to be looking for. All right, we're now about 15 minutes. The market's open. It's on a Friday. Beware of your surroundings, right? Markets can stay irrational longer than traders can remain solid. That's absolutely true, Brandon. Listen, this is the time when you want to be pushing positions. Whether a lot of you I know are still long against the yen, right? Those are positions that there's just no reason yet to consider getting out of. Any pullback, here's your last swing low. This is like the equity markets. It's all the way down here at 69.50. As long as you're above it and the market continues making series of higher highs, there's no reason to go ahead and even look to lock in profits yet or where that might be. So let me, that's a great question. I'm glad I got to see that one. And he's saying that, listen, there's no such thing as a free money in the market. And the halving bull market thesis looks too easy. Market makers never give out free lunch. That's entirely true. But there's only a small portion of people who are extraordinarily bullish on Bitcoin. There are people who are extraordinarily at Bitcoin. Look at Raul Pal. He just did an interview talking about in the next 5 years, he's looking at 100x on Bitcoin, right? Raul, more than almost anyone else over the past year and a half, has been more right than anyone else, right? He's saying we're going to see $1 million Bitcoin, 100x in the next 5 years. He's close. It's going to be 5.5 years, but is there any? But if you look at crypto Twitter, almost everyone is bearish on Bitcoin. People are talking about a crash, much lower lowers. You still have, people looking, thinking that we're coming down and we're going to take out the March lows on Bitcoin. So there is no free lunch. And, a market's a market of all different participants. You're listening perhaps to my opinion and the research that I've put together, but that's not a free lunch. Very few people are aware of and believe in this model. And there are people that are aware of it and they don't believe it. There are people who are extraordinarily versed in Bitcoin and they follow Elliott Wave over the stock to flow model, right? You have to come, I believe, from a finance quant background to be able to understand the stock to flow model. That's not most people inside Bitcoin and or the markets. So there are actually very few who believe this. So, and even after the next halving, even after this one, if people see this proven yet, you'll get you'll get more people who are then believing it, but you're going to a large portion of the crowd is going to be like, well, now people are aware of it. This next time it's going to fail. So it goes both ways. Yeah, that's a good place to be, Thomas. This is probably the comment of the day that he's scared to buy into this market. So that's why thank you, Lemmy. You just stay on the sidelines then. You stay on the sidelines, even if it was for 3 weeks or longer until things were clear. Greg, because math is math. Math is math. There's nothing to look for right now. So the question is a good question. It's a really good question. I agree, Weeping Angel. I'm not a fan. I love the markets. I'm a fan of the fib levels. I see them. I respect them. Moving averages, of course. Oscillators can be used, but when it comes to Elliott Wave, really good question over here. And it's, what are the signs that we can watch for the next plummet of the SPY? There is absolutely no reason to look for any type of crash or plummet coming right now in the markets. We're not looking for that. Now, is that a fluid situation that could change a week, 2 weeks, 3 weeks, 3 months from now? We're going to watch September and October, right? Yeah. When it comes back, when the markets are crashing, the markets are crashing. It is clear as day, right? They always climb up and take the elevator down. Look over here. This is the markets crashing. This was as clear as day. It's going to happen again. Is it going to happen anytime soon? Well, we're not looking for that today. Right now, as we're seeing this beautiful breakout, this was a big level over here. This was a big level. This whole area that we've now broken out of, it's pretty bullish. Watch this little peak right here. Look where the price is right now, though. You got two peaks. That's not, I don't think that's a strong level by any means where we should see a turn. That's a light resistance in the market, right? Exactly where we are right now. You could see this light resistance right here. You could see that we wicked down into there and then wicked up into it. So that's a level to watch. That probably will be looking like on the way up, maybe an area of support we could lean into. Let me draw that in. But right now we're not looking for any type of market crash. Could that happen? Yep. Why will that happen? Well, do we have, so people are saying, and I have to be open to it, that there's no way we could see further lockdowns. All right. At this point, do I think that they would be able to enforce lockdowns in the country, that people would do it? No, I don't think they could get them to stop rioting. But does that mean that we're not going to see an increase in infections that could have drastic consequences? Absolutely not. That is the greatest risk in the market. The second greatest risk is rising tensions between US and China. That's escalating. That's going from bad to worse. That will continue over the next year to continue to escalate. And then beyond that, that's a huge risk for the market ahead, as well as obviously the current situation of the virus and the economy. Whether or not you have lockdowns or not, people's behaviors are going to be changing. People can't pay their car payments. People can't pay their mortgages. People can't pay their rents. People will not be able to pay their health insurance. This is going to have cascading effects across the whole economy. If you think that we're out of the woods or that we're not going to see another crash, I'm trading against you. Now, am I looking for that right now? Not even close. That's not on my horizon at this point today. Will we bring that back into the conversation when it's appropriate? 100%, right? Are we going to see risk on now and that's going to continue without seeing risk off again? Absolutely not. Absolutely, David. David's saying that class warfare could be a risk in the US too. What we're seeing right now is class warfare. And I say class warfare, what that means is that the Federal Reserve has caused this great inequality inside the United States and world. The middle class is dwindling. The result of this situation we've been in this past year is going to cause a further dwindling of the middle class. People will move into poverty that will never be able to get out of it. This causes class warfare. It's the rich versus the poor. It's the elite versus the peasants. That's what's developing. And as soon as America unites, if you've ever been watching, not under Donald Trump, if you've been watching what happened under the Obama administration, the US has been divided like never before. And that continued after Trump was elected by using Trump as being the one, right, who was causing these division. It was the media causing the division the whole time. The only way that they control the people is by dividing them. Once everyone in America learns that they are on the same side and unite together, whatever division you want to break it down to, once they're united we stand. America is founded on the principles, united we stand. And not until they are able to unite, which means shutting off the TV and stop being programmed, learning to think for yourself, right? It's going to be hard work. It's going to be hard work reprogramming that young generation who grew up going to Marxist schools, right? They're embracing socialism. They're embracing communism. It's going to be very difficult. But once that happens, that's when you're going to see change. What? No, I would love to know though, June 12th. Immigration. Listen, could you explain a little bit further? Because from my opinion, what happens in the U.S. is people who immigrate, and I live in Mexico. People who immigrate to the United States, they actually embrace, let's call it American values. They've seen what's happened in their countries. They understand what socialism is. They don't want any of that type stuff. Anyway, I'm sorry. Well, I'm not sorry. I'm thankful for that rant this morning. I want to continue taking a look at what's going on. So Gary says he thinks that peak recovery on unemployment occurs in September, setting the stock market up for another October disaster. I mean, I'm really cautious about what happens in the fall. I've said that this month is a make or break it month. I would have to say, as the month's getting started right now, first week of the month, closing today, things are looking pretty good, right? And this could carry on through the fall. And by carrying on, do I think that we go straight up? No, I don't think we go straight up. Right? Markets tend to move. Markets tend to move up, consolidate, move up, consolidate. Is it possible that we are able to enter into some type of range, making a long consolidation range without taking out the yearly highs, without breaking down? I don't even know where to look now. I'm not going to be doing it right now. I don't know, probably around 30.50. That's the level. 30.50, 30.60 is the level that we had a lot of trouble with. Is it possible that we spend the next few months in this range? Yeah, that's completely possible and probable. And then at that point, what's the next break, up or down? Well, we don't know. We'll find out. Hometown Stories thinks you all should unsubscribe because I'm blaming Obama for 3 years of Trump. Go ahead and unsubscribe, brother. Right? If you can't understand and think for yourself and understand the division that went on between between the police and the people, between blacks versus whites, between red versus blue under the Obama administration, you're blind, and I can't help you. Please do leave. Listen, I'm not here to pick a side. I'm here to just talk about what's happening, and then I could I'm completely unattached, right? If you find yourself getting triggered, you're probably programmed. The only people who get triggered are the program ones, right? The other people here are just trying to figure out what's going on and be able to plan and keep their family safe and build their futures. So there we go. We don't like, let's not use words like, because of the fact that the whole conservative liberal thing has been planted upon us in order to divide us. Let's not use words like liberals and conservatives. Who cares about Obama and Trump and all that? We don't need to talk about that stuff or use their lingo or language, because that's not helping us. All right. So for real, snowflakes and all that, like, guys, bring that stuff elsewhere. Right. Let's only talk about what's going on. That's up to you all. I can't do anything about that. But critical thinking has been lost. They don't teach that in the schools anymore. Critical thinking has been lost. They don't teach that in the schools anymore. Yep. So by the way, let's pause really quick. This is a very important comment that I'm going to be reading right now. It says, Jordan, I appreciate you and this channel. If I'm allowed to raise my opinion, I would like to suggest that we stop talking politics here. In my opinion, we should focus in finance, politics, and stress. And yes, and I mean, yes and no. Yes, right now we're going to stop talking about politics. We needed to discuss what was going on in the markets, because the question that started this all off is, what is the risk to the market? We needed to discuss what is the risk to the market. Now, I understand a lot of people get triggered. If you get triggered, if you get emotional, you have to just take a breath and think about what's going inside you that you will get triggered for that, right? That's not normal behavior. Something's off in your emotionally that you would get triggered. So you need to address that yourself. That's not, I'm not a psychologist. I'm not going to do that for you. But we need to be able to discuss these things from time to time. It usually happens on a Friday when we're not going over the market, looking for setups in the market, because it's Friday, right? DXY coming back on strong, testing out that resistance over there. Listen, it's really important to have a conversation. What is the greatest risk for the market? The greatest risk for the market right now is the fact that they have us divided. You're seeing that happen right now in the comments. You're all divided. We're on the same team here. This is conquer trading and investing. We're all on the same team. We're all working together to make money. We're not divided. Once you start throwing in certain terms that trigger people, they get all divided. That was purposely done, and they're winning. You can't let them win. United we stand. Until you understand that, they won. Until you understand that, they won. And any way you look at it, they look at us all, whether you're black, whether you're white, whatever nationality you are, they look at us all as peasants. Peasants. That's how they refer to us. You don't understand that. The way that they keep us down is by dividing us. How do they divide us? Look at Operation Mockingbird, right? They control the media. They control what you think. They control it all. Don't let them win. Boom, boom. Dan, they are they are the powerful, the rich that conspire together to control the world and consolidate their power, which has been going on since the dawn of mankind. That's a good place for you to start, Dan. I think most people in here understand that there is a they and who they are. But if you don't, that's a place for you to jump down the rabbit hole. Yeah, that's right. This is a really good question. What WTF? So if I insult you and your family and say horrible things that you can never imagine, you will not get triggered and say when you get triggered, someone is wrong. Yeah. If you insult me or my family, I know how to think for myself. I know that you're an idiot and it won't bother me at all. Yeah, that's exactly what I mean. So anyway, let's keep going. We need to talk about these things, but some people can handle it. Some people can't. So, by the way, I always have a method behind my madness, right? I'm very thoughtful and calculated in what I do. So what I'm doing here is slowly dwindling away those that don't belong here, because it means nothing to me whether, those that don't belong here, I don't want them here anyway. So if you can't have an intelligent conversation, then I don't want to share my knowledge with you. That's all. Boom, 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 boom. No, I'm on board the market. I don't know what you're talking. So this is a good comment. Jordan, your butt hurt and ranting now since market is running away without you on board. No, that's not true at all. I'm short here the euro Australian dollar and I'm long the US dollar Japanese yen. I don't know what you're talking about. Calvin, that's right. We'll get rid of them. The trolls don't bother me. Don't let the trolls bother you. I'm not paying attention to them. All right. So let's move over to the DXY right now, Marco. Marco's made the transition. Listen, if you're on board or you're not, that's fine. Let's look at the DXY because we're coming up. I do think that we're going to see a further extension. Hold on one second. All right, how about this? If right now, if anyone, first of all, if anyone appreciated the conversation that we had here in this morning, thought that it's relevant to our investing, thought that it was important for us to discuss, please go ahead and hit that like button and show your support, right? If you don't like Donald Trump, go ahead and hit the like button. Whatever. If you don't like Obama, hit the like button. But if you're here and you're learning something and you want to stay here, hit the like button. How long? We're going to look at the DXY first, then we'll talk about whether or not how long this euphoria is going to last today. But let's start over here. Let's look at the DXY and how long this might last. We're seeing yields rise in the US. That's definitely benefits the dollar. Now we're seeing another thing happen. We are seeing potential for growth in the United States, right? The White House actually said that we were going to see horrific GDP numbers in the second quarter. And then they also said that we were going to see tremendous GDP numbers in the third quarter. And if we see that, could we continue to see yields rise in the US as we're seeing growth in the US? Yeah. You know, where do you want to be invested, right? In Europe or in the US? Or in China or the US? I think people are really concerned about China right now. The US looks like a continued great place to be. It looks safe. I think the major reason we've seen pressure on the dollar is not so much the swap lines or the expansion of the balance sheet, because if you look around, it's not only the US who is expanding their balance sheet, it's other countries, and it's all relative. You have to think about, you know, yes, the US expanded their balance sheet more than anyone else, but at the same time, the US dollar accounts for more than the money supply than anything else. You're talking about looking at 70% of the overall money supply. Matt, thank you, brother. I appreciate you too. And I appreciate everyone's here. And listen, all that I care about is taking everyone further with me. If this is not for you, then it's not for you, and you're not here, and that's okay. And those that are able to go ahead and see the markets in a new light, I receive feedback, sincere feedback, almost every day about people who's trading, whether they started fresh and new, not knowing anything, which is unheard of within several weeks to be able to put together profitable weeks, a couple in a row. Or people have been trading 20 years and for the first time are consistently profitable in their trading. I know the value of what is shared here. I know that the internet will always be full of trolls and people who are looking for attention because their mommy and daddy never gave it to them. I'm not here to give it to them. I could care less. No, you could say anything about me and my family, and it's not going to trigger me because I know the truth. And, you know, if you know the truth, then you don't get emotional, right? We're here for people that want to work together to better themselves, to better their position in life, and to build a future for not only themselves, but for their children and their children's children. That's why we discuss things rationally. We were looking at the dollar coming off, I believe, not because of the swap lines, not because of the expansion of the balance sheet. I think we were looking at this because what we were seeing was yields, you know, obviously as interest rates were moved down to zero, falling, and it made no sense for a lot of people to be holding on the dollar. Now you have to start looking towards where the growth is going to happen. Is the conversation going to switch towards the Fed rising rates? I don't know. I mean, today's the first day that I'm really thinking about that. And we'll see what happens. But as long as we have a potential for growth in the United States, which we are seeing today, could that change 2 weeks from now if we start seeing a resurgence in cases across the United States? Yeah, we'll reevaluate then. That's not where we're at today. All right. Right now, dollar's looking good. If it's able to clear above this resistance, right? Well, it's still got 97.33 to work through. This is the dollar trying to repair a little bit of damage right now. That's what it's looking to do. The dollar is damaged, is looking to repair damage right now. There's no bull case here for the dollar at this point, right? But is it possible that we're going to take out this resistance and then test 97.30 and possibly take that out and then come back and test some pretty strong resistance, whether it's 97.90 or the big one at 98.30? Yeah, that's all possible that we're going to see that, right? That's what it looks like we're going to see. Now, what happens up in this area? Well, that's another question, right? That's the big question. If we get there, what happens? And that's when we'll be looking. So like right now, if you're looking for, Australian dollar, US dollar, right? Well, maybe you want to back off for a little bit here. Maybe you want to back off. And maybe, as we come down into supports, maybe it's this one or this one that looks like where you'd want to be looking, where the risk is more on your side, where the risk reward is more on your side. But right now, the dollar is looking like it's repairing some damage. Let it go. Stand back, right? US dollar, Japanese yen, that's the trade. What do you mean I'm not participating in this market, right? And here I'll be looking definitely to add to this position. And I'm not looking to take profit anytime soon. I'm hoping I get a look at 112.18 and I'm hoping we break that. We'll see what happens. If I see any reason to exit the trade, you're all going to be the first to know. Does that mean that you should jump in the trade? No. If you didn't get my entry, wait for a pullback. Let's see if we get in again. Hey, Farhan, I'm glad you're with us. I cannot imagine starting out your journey into the markets and having stumbled across this. There's no education like this that you will find elsewhere on the internet. That's just a fact, right? I'm not trying to, whatever. This is just a fact, right? To be here and to be starting fresh, or again, to be trading for 20 years, it will change the way you trade. The markets are extraordinarily complicated, complex. You have some of the brightest minds in the world here competing for the resource of capital. Listen, you have to keep it simple. Just look at the market. The only indicator that's not lagging is price. Price is the only indicator that's not lagging. All you need to do is follow price with the help of the market structure of support and resistance and trend lines. That's where you start. Trading, so Federico, there's no question leverage could work for you or against you. A lot of traders, they come into the markets and they trade with too much leverage. That's absolutely the quickest way you could fail. Leverage is a beautiful thing if you use it correctly. You only need a small amount of leverage. Generally speaking, people that are starting in the trading program, I have them starting off risking only 0.5% per trade. You can make fantastic returns yearly risking 0.5% per trade. Now, I can't even begin to compare the difference between trading the foreign exchange markets and the U.S. equity markets. The foreign exchange are by far a better market, by far easier to trade, and have every advantage over U.S. equity markets. No, we have no signals today. And I trade off the 8-hour time frame. Now on the S&P, I'll be trading on the 30, 15, 1 hour. That's all different depending on how it's moving. But listen, the S&P is a very difficult and advanced market to trade. If you're not yet profitable, you should not be trading it. Same thing with gold. Gold is a difficult market to trade. You're better off trading foreign exchange currency pairs on the 8-hour time frame. There are a lot of people in the trading program who have made that switch and are having a much easier time. There's a reason for it. Martha, praise the Lord. Martha, comment of the month. Praise the Lord. Amen. No, I don't use the sentiment index. Listen, I don't, this is the most important lesson of the day for those that are new, and here to learn. I do not use anything except price, which is the most important, right? I trade price around the market structure of support and resistance. And there's a reason that price keeps hitting into these levels and then always moves and traces off them with the help of trend lines. Stefan, it depends where you're located in the world, which broker you use. And that's the truth. There are so many good foreign exchange brokers. Thomas, I agree with that. Yep. And there's no question people could put up 10x and 30x gains in the equity markets, just buying and holding, a growing company. Is this the environment for that? I don't think so. I think we're towards the end of a cycle. This bull market has been going on now for 12 years. I think we're towards the end of that cycle. Now, eventually the cycle will end. They don't want it to. Eventually it will end. And when it does, at the beginning of the next cycle, does it make sense positioning in equities for the next bull market? Yeah, I agree with that. And I agree that you could definitely make good money in the equity markets as well. It's just not as an efficient market. So Yank King Doodle, this is a great question. This is asking, do I think the average true range is good to new investors to determine stop losses? I traded with the average true range for an extended period of time. It's a fantastic indicator for current market volatility. Once I finally moved over to trading solely on support and resistance, I no longer use average true range because it's the support and resistance levels the market keys in off of. And that's where you're looking to take profit and move your stop losses around. You don't need the average true range anymore. US dollar, Mexican peso. I'm actually surprised that the peso is not under more pressure today. That's telling with the equity markets up so high, but it's also telling of the change we're seeing perhaps in the US dollar basing out over here. This is the little bit of the cheat sheet we're using over here. And I'm going to just draw it back in real time so you could see it, right? We are in no man's land, right? But you see this resistance line over here, this resistance line over here. Once it broke right here, it then flipped right here to resistance. And that's resistance, 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 resistance. Until you cross back above it, you can't look at taking a long position here in the US dollar, Mexican peso, right? Once you do cross back above it, you can consider taking a long position. Now you also have this support down over here, right? And I should move this up a little. Why? Because the market is putting in the support over here. So I'm actually going to move up this guideline I had, right? I'm going to put that right there. Break down, and you consider further losses here on the dollar against the peso. But get back above there, that's the opportunity to get long. Yes, I mean, I'm not concerned whether or not you agree or not. I'm saying for several years, for a decade, I traded with the average true range. And it used to be one of my go-to indicators for determining volatility of market. You don't need it if you just use support and resistance. Euro US dollar is coming under pressure today with the dollar strengthening over here. And you could see it's going ahead right now and it's focusing on this support at 112.82. And as long as it maintains above there, okay, it's holding that support, but it's looking like this support's on the verge of being taken out here. And then we could see some follow through. We could see some follow through down to the next support at 1.1209. And then if we break that one, this is the important one. This is the important one down at the whole number, 1.1. No, I don't think there's any reversals coming in the stock market anytime soon. Buy off supports. There's no reason. It doesn't look like there's any type of reversal coming. Really simple. What I do think is going to happen is that we're going to spend the next 3 months probably trading in this range, somewhere in that range. Unless, of course, June could turn ugly. There's no indications of it doing so right now. Probably we consolidate up in here for an extended period of time until the fall. See what happens in the fall. This is so funny. This question's coming up. This is the last time today I'm going to address it. The market is really complicated. There are a million different indicators that you could use, and they all conflict with each other, including time frame. I follow price alone with the help of the market structure around support and resistance levels, with the help of trend lines. I take something extraordinarily complicated and I simplify it down, which is a sign of genius, and make it extremely simple. That's the best way to trade the market. I have people with me who never traded before, and after several weeks are able to put up profitable weeks. And I have people that have been with me for 20 years and longer who are the first time in their life are now consistently profitable. It's up to you whether you continue to go ahead and try to figure this out on your own. I guarantee you're not going to do it. I guarantee you, I know what it took me to do it on my own. And I know I do not think that many other people could do it. You're being shown the key. You're being shown how to do it. It's up to you whether or not you want to do it or not. Now, if you want to stick with fib levels and if you want to stick with this, that, blah, 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 you're a trader and you get to make all the decisions, and you could compete in the same arena as I do with whatever experience you have. You could even open up an account today, you have no experience, and compete against me. It doesn't mean you're going to win. It's up to you whether you are open to learn or you want to continue to find out the tough way. Bobby FX, that we don't give signals. JF, that's a really important question about how many pairs I follow. It's about 30 different pairs. It's about 35 different instruments. Now, for a long time, I only traded the euro US dollar. I thought that focusing your attention on one pair is the right thing to do. This is absolutely the wrong way to think about it, because then you're forcing yourself to take trades that are not there. By going ahead and being able to spend an hour and a half, 2 hours a day going through the charts and looking for the best opportunity, I'm then able to narrow it down when setups come into the market. Usually there's 3, 4, or 5 setups at a time. I'm then able, out of those 3, 4, or 5 setups, to figure out which is the best setup. And that's the trade I take. By looking at so many different pairs, I have more opportunity. Yeah, so, Samir, I address, comments that I see, no one in particular. Jimbo Mason, I saw that comment. Thank you for that. I do definitely appreciate it. Same thing with you, June 12th. I don't have any type of view on individual stocks right now. If you were playing the stock market, right, you probably want to go with the momentum. And then you probably want to also be going against companies that are in really bad financial shape, such as like, like GE or perhaps AT&T. Yeah, your US dollar is looking fantastic as we've been rejected here by this resistance and then came over and started making lower lows. Jax, thanks. I appreciate that, brother. I appreciate that. You know what? I have to be honest with all you. I really enjoy the times on Friday where we get to talk about different things. The reason why is by Friday, you want to be either winding down positions, meaning either taking profit, locking in profit. You're not looking come New York to be taking new positions more often than not. So it opens up the opportunity for us because over the weekend, we do our preparation for the week ahead, whether it's on the S&P 500 or through all the foreign exchange currency pairs. We're taking a step back and we prepare then. So on Friday, it offers up the opportunity for us to actually talk about things that are actually very important that we don't have the opportunity to do normally. And I really value that, or even maybe if it's spending an extra 15, 20 minutes after the session, just kind of, hanging out and talking with you all. This is not the type of stuff we get to do very often. And you know why? It's important to me. I like it. I understand there are some people not capable of having a conversation. That's fine. They don't belong here, right? I'm not here I'm not here to help you out and be like, all right, now's the time to buy. I'm here to impart my knowledge. I know it makes a huge difference in people's lives. The people that are looking for the easy way, this is not for them. The people that are not able to handle an adult conversation, it's not for you. That's all. So Eric, this is an awesome question that I have to that I really want to talk about because this is for me one of the most important questions for me. What sector had the most jobs? I could put a link in for you. Look, if you go, Miguel, if you go down to this area over here, this breaks it down sector by sector, and I'm going to include the link for you right there. All right, but so this is an awesome question about what type of price target I am looking for before we turn bearish on Bitcoin. So let's talk about it. Destroy the like button, folks. Guys, 584 likes. Thank you. That's a great ratio in here today. Thanks, John, for that. That actually, listen, I have a kind heart. So when people are not able to handle the conversation and they do get triggered, I feel empathy for them. It's not their fault. It's really not their fault, right? It's think about what they're up against, the magnitude of the resources they're up against. Yep, Omar, we'll look at that. But first, I want to talk about Bitcoin, and then we'll look at the Euro Japanese yen. And I do feel bad, but at the same time, when I see, the amount of people in here being supportive and comments like that, so that makes me, it's hard. I don't want anyone their feelings to be hurt. I'm not the type that would ever call someone a name and be like, well, you can't handle it. I feel bad for them. That's the truth. So it's heavy on my heart when I see that. So I'm grateful for the extra support today. So this is the most important question when it comes to Bitcoin. And I haven't started this conversation yet because it's not going to be until we get towards it that I start talking about it. But anyone who's here today, this is at what price do I foresee Bitcoin going to, right? So first of all, I'm not focused on price. I do believe that it will be well over $100,000. I do believe that it is very realistic. It's closer to $230,000. And because these things overshoot each other irrationally to the upside, I would not be surprised if it were even above $300,000. So I'm not really interested in that. What I'm interested in is this. This is my map, right? And this is what I'm following. Now, you could see this dark green area, which was here, different during the first cycle, right? Different during the first cycle. These are not absolutes, but that's a little clearer indication of when it will be time to start accumulating Bitcoin again. When do you sell is a little bit more tricky. I'm not trying to get the top, and I won't try to get the top. I'm just going to be using this as my guide. I do believe that it will be well over $110,000. And I'll just say that. I'm not really concerned about the price. I'm not trying to time the price. I wouldn't be surprised if we saw over $200,000. And I'll just leave it at that. Nate and Jess, that's a really good question. And the thing is, if you look at Japan and their debt level, the U.S. actually has a lot of room to go. We could get ourselves up, right, to 40, 50 trillion dollars before that becomes a conversation. So we're not close to that there right now. Yeah, I own a bunch of Bitcoin, Mark. And I've been accumulating for a while, but what does that mean? That means, income that I have coming in will be used to further buy more Bitcoin. No, Sheldon. I just went ahead and included that link for you. If you want to read the breakdown of industries where the jobs came from, then here's the link, and you could do that yourself. There you go. Let's look at the euro Japanese yen, because that came into question over here. We're looking at definitely it. Wow. By the way, oh my goodness, look at that move. That's a rocket ship. However, above this level right now, and I'm going to add one over here, right? I'm going to add this level in at 123.38. They're not looking to trade against this. So the opportunity to look for possible shorts on the euro Japanese yen is now gone. Not looking for that anymore at this time, not until the EU starts maybe breaking down. But right now, the trade that you're seeing really intact is against the Japanese yen. That's not showing signs of breaking down. We're perhaps seeing the opportunity that the dollar might firm up. It might be able to firm up, and that might play out even further on the US dollar Japanese yen. But we're not looking at risk on coming into the market. Excuse me, risk off coming into the market. This is not favorable for the Japanese yen right now. There's a ton of money on the sidelines. There's an enormous amount of money on the sidelines because all the smart money was not involved in this, right? And I know there are a bunch of heroes out there who are like, you're an idiot. But all the smart money is not involved in all this. There is a ton of money on the sidelines right now, ready to be deployed. And it's not necessarily going to be deployed right here, right now either. But you're seeing repositioning in the FX markets. You're seeing money that flowed into the Japanese yen when we were in that risk off environment now being taken out. So you are seeing just a different flow of funds that's taking place. Money is going from one area now to another. In the equity markets, there's still an enormous pile of money on the sidelines because the smart money is still not getting involved over here. Where Jason, the JPY is weak, Japanese yen is weak because we're in a risk on environment. All right, everyone, that's the session for today. I got to get going. I'm traveling. I hope that you all have a wonderful weekend. Definitely look out for we'll take a look, a bigger bird's eye perspective of the S&P 500 this weekend. Also probably take a look at the NASDAQ, maybe also the Dow. And then we're also on Sunday, we'll have our look at the week ahead for the foreign exchange markets. I really, really appreciate you. Thank you for the time spent today. Thank you for the discussion. Thank you for all of those who were able to add to it and keep level-headed. There's just one thing I ask of all those that made it here this far, in any time in the future when we have to talk about such important things, don't attack those that hold opposing viewpoints. And that includes using any type of word that could be considered derogatory. That doesn't help people learn how to think clearly and for themselves. So that's just my one request to all of you. But I definitely want to say thank you for the blessing you are in my life. Thank you for the insight you add. Thank you for making me a better person. Thank you for helping my trading. Thank you for going over these charts with me and really having to come from a teacher's and educator's perspective. It really definitely helps myself. And I'm grateful for that. Grateful for all of you. God love you. Have a beautiful weekend. God bless you. And I will talk to you on Monday.